Real estate in India is going through a major churn. While the industry is recovering from the impact of demonetization and weak sales, it is also preparing itself to comply with the Real Estate Regulation Act and the much-awaited tax reform, the GST. We take a look on how the property market has fared in the first quarter of 2017 as compared to the last quarter of 2016. A report by our colleague Ashmika Singh, who spoke to the market pundits to find out the latest real estate trends across India.
8th November 2016, Prime Minister Narendra Modi initiated a massive crackdown on the shadow economy, a step that would necessitate a rewriting of the Indian economic history. All the sectors bled and real estate was no exception, according to data analytics firm Prop Equity. New home launches across top 8 cities dipped over 19% in March quarter as compared to the December quarter last year. This as developers focus on clearing their unsold stock. Home sales remained subdued and were down by little over 1%. But is all this gloom and doom?
There is going to be this 2-year period more that we see where real estate sales, besides the affordable housing segment, will take to pick up. So whether it is luxury or the mid segment, especially in tier 1 cities, we're going to have a slow offtake compared to what it was in the last 6 months. It's going to continue in the same way.
The developer community is, however, hopeful that with the implementation of the Real Estate Regulation Act and GST, things will turn better.
I think that the industry is already showing there's already showing signs of revival. Sales are picking up gradually, and I think that things like RERA, things like GST, things like monetization, lower interest rates, all these aspects, plus the government's drive towards affordable housing and infrastructure development, all of these are going to translate in a short period of time into larger sales.
There is a silver lining though. The number of unsold projects has declined marginally by 3.12% in March quarter this year versus December last year. And with RERA in place, the developers are expected to complete the existing projects, which will contribute to 6% of the GDP directly. With camera person Stephen, Ashmika Singh for NDTV.